All right. Hey, everybody. This is Lane and Dean here. Welcome to the December 2021 monthly market update, where we go over what's been happening in the news across Hawaii and the Maine.
In Hawaii, there's so much to do. There's hula, there's surfing, and real estate too. We just two local guys with so much to say. So listen to the Real Estate Braddahs today.
Hey everybody.
We're on.
Cool. Hey, the vocals came out clearer this time. Last time I heard the guitar, but it sounded muffled. You changed it?
No.
Oh, same. Oh, interesting. Anyway, everyone, hi. I'm Dean Ueda. We're on episode 46, so by now, hopefully, everybody knows us. I'm a former CPA, now real estate investor and realtor. Check me out, my YouTube channel. It's YouTube/Real Estate of Hawaii. Also Facebook and all those other great social media platforms. So jumping right into November statistics for Honolulu. Nothing really exciting today. It's the same information same trends in terms of strong sellers market, and in fact, inventory is going down a little bit even more. So just to go over the stats as we do every month, information is a little early and it might change compared to what the Honolulu Board of Realtors release on the 6th of this month. But for November, we have single family homes median price at $1,050,000. No change from prior month, but a 20% increase from same time prior year. Same story with condos and townhouses at median price at $500,000. Again, 19% increase from prior year, but not much change from prior month. Days on market, we actually see a little bit of a flop here, where single family days on market, we have 12, which is really low, and it's a 9% increase from prior year. But for condos, it actually went down to 10. I think previously single family was always had a slightly lower days on market, but now condos are tightening up even. As for closed sales volume, single family, we had 369 closed sales for November, an increase of 7% from prior year. And condos, we have 593 closed sales for November, 42% increase from prior year. I like to always show inventory statistics in addition to these three. So homes available for sale, again, this is showing the supply side. So single family homes, we have 380 and 982 for condos. And that's a big decrease, almost 40% for single family and 44% for condos. And if you look at the trends, this goes back to 2019, you see it going up and then coming back down, and it's still on a downward trend in terms of supply side. So then on the demand side, or when we tie in demand, month supply of inventory, we have 1 month of inventory for single family and 1.8 months of inventory for condos and townhouses. And again, I like to show the trends, and best fit line for these, both single family and condos, we see a downward trend in terms of the month's supply of inventory, which is not good news for the buyers we have, but great news for the sellers. This slide I showed from last month also. Again, I like to compare the supply with the demand and trending it out. So this is back as far as 2005. The top line, the top graph is new listings, showing, I guess we could say, like supply coming onto market. And then the chart below that is tying in the demand section, right? The month supply, again, from 2005. So if you look at the two and you compare the two, I like to think that the new listings trends, it seems pretty even, except for that blip again back in, I think, 2006 for single family. But that's townhouses. But if you look at the chart below, which is the month supply, there's a lot more peaks and valleys and ups and downs, or big ups and downs. And the way I like to think that says is that new supply is constantly coming on at a pretty standard rate, but the demand has bigger swings. And right now we have a big swing up in terms of demand. Again, nothing new, same story as we've been talking for a bit. So let's jump into our scam corner. Every month, you guys know I like to talk about scams. So this one kind of an interesting one because it's great timing, because we just had Black Friday. We have a lot of people shopping for the holidays, and it's an Amazon order confirmation imitation scam. So what the criminals are doing, and they're sending out their own version of confirmations of purchases, right? And in the scam, the criminals send you a fake purchase confirmation email that looks like it's coming from Amazon, and you can review the details about the fake purchase, like payment amount and the mailing address. And then you need to click to view or manage. There's a button to click or manage the order. And if you click on the button, it'll take you to Amazon's real site, but you won't be able to find information about that purchase. So the last resort is to call the customer service phone number, which is, of course, a fake number. And then they'll ask you for your credit card and CVV number to cancel the purchase, which sounds fake, right? If you guys know that something shady sounds wrong about that already. So instead of canceling, of course, then you're giving them access to your credit card. So again, these cyber criminals are always looking for new ways to catch you. So, don't fall into it. Ways to, so it's surprising you, but that's why I like to bring these up, and for young and for old. So watch out for fake customer service phone numbers. If you need assistance, go to find directly through your own, through the website, and then don't click on links that you weren't expecting, because it could be malicious or have malware. And always don't share sensitive information like credit card numbers or SSN or birthdays over the phone. Yeah. So that's the scam of the month that we need to be wary of. So next I wanted to talk about new construction. So one of the new developments is out in Ewa Beach. The whole Pili community by D.R. Horton is not new, but this single family home development called is. So they actually just had their first release in November last month, and I think they released about 12 homes. So these are single family homes, 3 to 4 bedroom layouts with attached garage, and they're both PV and electric vehicle ready. So there's some great floor plans. If you look at that picture on the exterior, shows, again, those are just mock-ups, but it's very contemporary in how it looks from the outside, and some say it's gonna look like if you're familiar with Lico at Whole Pili, which is another single family that came out earlier. That one, the exterior might look similar to that. Right now, there's nothing to see in terms of model homes. But what do we have here on the next slide? You'll see on the left that red circle with the arrow. That's where Lico is going to be. So it's going to be the southern portion of the Whole Pili neighborhood. And it's going to be featuring 5 different types. So the smallest is going to be these, which is a 3-bedroom, 2-car garage, just shy of 1,300 square feet. And then the biggest ones are the Aono configuration, and this is going to have an ADU on the bottom floor. So it's going to be like a 3-bedroom, 2.5 on one side, and then the studio with the 1 bath on the bottom. It should be we're not sure when the next phase is going to be coming out, but if you want more information, you always can reach out to me. Another fun new construction coming up that's coming up in the Core Ridge area. It's going to be some townhouses, and it's called Walea at Core Ridge. Word on the street is this phase 2 and 3 might be being released as early as tomorrow. So if you want to get into this lottery, hit me up. The developers did say it's going to be coming out soon, but they didn't say exactly when. And I'm a little bit of a buzz that it might be tomorrow, and in which case they'll give us about a week and a half to submit your applications. So again, there's as small as 2-bedroom, 2 baths, and big as 3 bedrooms, 2.5 baths, starting at the $650,000 range. So that's some information about a few new construction developments. And some good things about new construction and some bad. Who doesn't like new things? So from the pro standpoint, you're getting something. You'll be the first one to bless everything. Of course, deferred maintenance, things aren't gonna be breaking in the near future. So you have a lot of savings that you can have from not having to re-roof for a while. A lot of times you can pick your own finishes and finishings, flooring, or upgrading countertops, that kind of thing. And this is a potential, but you could have baked in equity. And what I mean by that is, I think, Lane, we talked about this in other episodes where, especially in the downtown, the Kaka'ako, where it would take more like 2 years from the point in time the prices are set and you set your deposit and you're committed. And so by the time the property is actually complete and you're buying it and moving in, it could have appreciated in prices from the time that the price was set. So that's what I mean by potential baked in equity. And that's exciting. And what's also exciting is a lot of times these phases, there would be like 15 units available for sale, and there's way over 100 applicants. So there's a strong demand for these. And that's always a good sign, especially when someone is asking me, is now a right time to buy, right? So when you have 100 applicants going for 10 to 15 units, then that's a good sign that the demand is very strong. And it, if it wasn't to go to you, it can go to somebody else, or someone will be waiting to buy it if you didn't want it or if you had to sell it. Yeah. On the other hand, some negatives is a lot of times you're buying off of blueprints. Because the market is so hot, developers aren't creating the model homes as quickly as needed. I think Coleridge, it took maybe like a year or two before the single family models came up. Also, you're not exactly sure what the neighborhood's going to look like sometimes, because maybe the roads are in, but you don't know where the schools are or going to be, or the shops, or even your neighbors. You don't know who your neighbors are going to be. A lot of times for my buying clients who are buying resale properties, I tell them, let's come check out the neighborhood at night and scout out what our neighbors are doing and see if that's the kind of place and neighbors you're okay with. So that's, you don't know who your neighbors are going to be, because a lot of times it's all new homes being developed. So that's one of the negatives. But like I said, if you're interested with any of the new constructions, let me know, because I think I did this other video where calculating statistically, sometimes your chances of buying new construction are statistically better than buying a resale. But that's for another discussion. Check out my YouTube channel. Anyway, I digress.
The new construction, a lot of these, if you look back at like the floor plans, like square footage is a lot smaller. Price per square foot is a lot higher. And that's the general trends, right? Like people can't afford, everybody wants new. Who doesn't want the newest iPhone, whatever? But y'all can't afford it. So they make this smaller.
Yeah.
So your price per square foot goes up.
One thing to counter that from the developer side, though, is at least one thing that's neat is that the architecture, the designs are getting smarter. So when you're walking into these model homes and you're checking out these new places that, like you said, have less square footage, a lot of times the way they design it, the open design in the kitchen and stuff like that, it feels a lot bigger than the 1,200 square feet that it. So that's one positive to counter that.
But so this ADU downstairs, is that like is that designed for in-laws or?
I think they never specify if it could be like for rental too, because it's a separate unit to access. I haven't gone so far to see the association rules if that would be allowed, versus
it doesn't matter. Hawaii people are just going to do it and whatever they want.
Yeah, the bigger question or the bigger concern I think is that I wouldn't mind buying it for long-term rentals, but I would probably shy away if I was trying to do like a Airbnb. You know what I mean?
Yeah,
that's a lot easier to get policed versus a long-term renters. It will be less chance of get reprimanded or
unenforceable long-term rental, somebody living in your ADU, whereas the Airbnb is super, you're very exposed.
Yeah, because you can say, oh, that's my cousin living there.
It's part of the family.
Yeah, that's it for new construction. And this is our last presentation of the year. I don't know. What do you think, Lane? Did this year go by too quickly, or is the end coming only too soon for you?
Still 2020?
Yeah. It's all one big mishmash, right?
Yeah.
And then we have Omicron coming here now. Oh my gosh. So anyway, with that said, too, being that this is the end of the year, it can't come with any more gratitude. And we just had Thanksgiving. And so this is more reminder to all, but for me too, I'm always trying to remind myself to try to be my best self. Our time here is short. Yeah. My challenge, Lane, and I don't know, maybe you can help me out on this too, is like having the balance of having gratitude yet being hungry. And I don't know if it's something that's intertwined or whatnot, but trying to have that gratitude, but still being hungry for more. And part of that, I think, is I need to remember what my why is, whatever it is, whatever your folks' why is too. And another fun thing that I always think about is, and I think Lane, your group also helps me to remember, and the guys in our gang, is to try to leave the place a little bit better than how we found it. So hopefully everyone can keep that in mind. And that's something that I'm going to be trying to remind myself towards the end of this year.
Some people, they don't care. It's all out for themselves. You try and stay away from those people. Right. That's the goal.
What do you call them? Assholes? Is that what you're saying?
Yeah, some people are petty, right? Like they like to be cheap, and we were like that at one time. We still are, but some people, they get over that and they get to a point where it's like you're only here on Earth for a certain amount of time.
Yeah.
Might as well leave it in a better place. And I think you find people that are aligned on that mission, or that
Yep.
people who
So-
are like that who are coming out to Hawaii January 14th to 17th. Dean will be there
There will be,
in
yes.
person. There are two kinds of people who come and people who don't. It's a pay to play thing. It's not for free. But yeah, I would probably argue that if this is probably the best networking event you're going to see this year, or your money back. I
Yep.
guarantee that. Can't guarantee returns, but you can guarantee you're going to have a good time. But anyway, if you want more
It's a-
details, go to simplepassivecashflow.com/2022 retreat.
Has the Kawaoka stamp of approval.
All right. So if you haven't checked out my podcast, go to SimplePassiveCashflow.com. But let's get going through some of the national headlines here. First, inflation is going up. I don't know, what's one thing that you've noticed that you're paying more for? Gas to me hasn't moved up, I feel, but
Yeah, I haven't seen that. I don't know, but I saw that they said it's over 6%. Yeah, the inflation.
yeah. That's just what they report. What is the real? What was that website? Shadow statistics for the real inflation rate.
Oh, yeah, because isn't the feds are meeting with the House, right? Or is it the one side, and they're talking about potentially easing up on the bond buyback and stuff. But
Yeah, it's not like the government's gonna move on a pin. It's gonna take them
Yeah.
2 to 3 years, in my opinion, to do anything.
yeah,
So, all right. So, first highlight I'd like to share is CVS Health Plans. They're planning to close 900 stores, focus on digital strategy. This is all part of Amazon's big movement into the pharmacy world, in case you guys haven't noticed. And I also bring this on board because a lot of higher net worth investors, they like to invest in triple net deals as a end game type of real estate investment strategy, which is lower risk and lower return than rental properties and apartments, that type of stuff. And the saying is, well, go buy a Walgreens or CVS. You can nix that buy because this type of stuff is going to happen in the future.
because like the CVS is probably like the anchor store of those malls, right?
Yeah, these are normally standalones, right? Because most mom and pop high net worth investors between 3 to 10 million, they can't afford a whole strip mall. They can afford like a little standalone Walgreens or CVS pharmacy. I'm trying to think. They don't really have too many in Hawaii. The only one I can think of is how it's, I don't know what that mall is. It's one with a really jacked up parking lot with the pillars that are like in every single parking stall. But alongside, adjacent to there, is a standalone CVS Lounge Drugs, I think.
Not Kamehameha Shopping Center.
I think that might be. But there's a standalone CVS pharmacy. And I think you also see this on the east side too, these standalone. But yeah, like, Milani, like you got Lounge Drugs in the shopping complex, the shopping strip. But usually the standalones are what CVS likes mostly. This is a report that your buddies at Pricewater.
Yes.
They always like to come up with this every year. I don't know why the heck we listen to a bunch of accountants, but they probably just pay a whole boatload of money to some other smarter consulting firm. But they come up with these different trends and reports. But this one, they're saying that transaction volume poised to bounce back to pre-pandemic levels. Recovery from the pandemic is expected to occur dramatically faster than what transpired during the Great Recession of 2000. Optimistic return for most sectors, all but hotel and the hospitality sector. That kind of impacts Hawaii. The reliability of small multifamily tenant base fuels recovery, and analysis of work from home trends find that small multifamily properties may be less affected than larger properties because fewer tenants can work remotely.
Yay.
Good for us, good for the landlords. Another point for Gene. Yardi Matrix says gateway market rebounds. So the gateway markets are the ones that got beat up over the pandemic because people are like, I don't want to live in San Francisco and pay all this money for this expensive stuff when there's no cool things in the city because we have to social distance. Things are coming back to normal. You're having a lot more absorption this last quarter. So not saying it's coming back all the way yet, but it's coming back. This is why I was actually looking at deals inside of New York City to invest in.
Interesting.
Because you got to buy. That's what smart money does. They buy when things are down and they get out of things when they're hot.
All right.
Redfin, they overlaid the home prices 2019, 2021. If you guys are listening on the podcast form of this, check it out on the YouTube channel, Dean's YouTube channel. But you can see the trends from 2019, 20. You can see the seasonal trend there, the bumps in the summertime, which is typically the hotter months. But I think the big takeaway here is that 2021, once the vaccines really start to roll out at the beginning of this year, how things really start to get. Things are still moving up, but
Yeah. And 2020, there was no seasonality or decrease in the winter months. It went up. Yeah.
yeah. Things are. You could say that the slack from the first half of the year drove through that slack punch traditionally. This from Real Page. Luxury apartment rent premiums going up once again, higher than the Class C counterparts. So the way logically I look at this is the pandemic impacted the Class B and the C tenants, mostly the lower end folks. Like a lot of white collar workers, such as ourselves, were lucky, again, have that gratitude that we weren't really impacted very much. I know a lot of people, a lot of investors that have a boatload of money and just itching to spend some money now.
Ready to pull the trigger.
Hopefully they do it on investments, not like frivolous vacation. They can, whatever. There's a lot of people just with a lot of boatload of money, and a lot of people are struggling. It is what it is, but this is why you're seeing the rents go up for the Class A a lot than the Bs and the Cs.
Just the bifurcation of the haves and the have-nots, huh?
You said it, man. You
Yep.
said it. Which side are you going to be on? Apartmentlist.com says rents still rising, but growth has slowed significantly. Still going up, like 1%. It's not bad, especially when since March of 2020, these 10 places went up by 30 freaking percent. Tampa, Florida, Gilbert, Arizona, Glendale, Arizona, Mesa, Arizona, Chandler, Arizona, Boise, Idaho, Henderson, Nevada, North Las Vegas, St. Petersburg, Florida. All of that went up 30%, which normally over the long term, usually 3% is the average. But there's your Las Vegas, man. If you want to buy a quadplex, let's buy one.
Yeah, no, we got property managers. We got boots on the ground, guys, dude.
No, I don't. What I mean is, I don't want to play asset manager. I don't want to do that.
Oh, got it.
You play the asset manager.
Okay.
I'll give you your real estate professional status hours.
There you go. I need those.
I'm still looking for somebody to run my beach house in Hawaii. So if anybody needs real estate professional status, let us know. We talked about this earlier, the tech cities, the gateway cities coming back. Why invest in lower middle class housing? The hint is to hedge in case of a recession, but also capitalize on current. Despite the uncertainty within the market, Class C properties are being touted as the best positioned property for an economic slowdown by some experts in the market during a panel discussion at Globe Street. Multifamily conference here in Los Angeles. Panelists discussed the gap between rent rates for Class A and Class C properties and reviewed some of the current trends within Class C properties. I still think you got to stay away from Class A for the most part because those are the people that get hurt and come down to Class B and C, except in pandemics where people can stay at home.
Yeah, this is a unique correction. But then from your other slide, the one, it showed that slight hiccup in Class A, but then it corrected it and then went above and beyond. You know what I mean? It looks like
Class A rents are like short-term rentals or hotel industry, where if things are good, you're kicking butt. You're absolutely kicking butt. You look like that one friend who bet on the hardware on the craps table and won big. And then he looks at Eugene and says, "I got a system to go on this stuff."
Yeah.
But to me, if you're a newer investor, like stick with the cash flowing stuff because you can't sustain a loss. If you got a lot of money to blow and risk and you're okay losing a big chunk of it, then gamble and go with like high cost of living, rental properties or real estate. This is why, Dean, I think you and I should just go buy a house on the beach and just speculate the heck on. Hawaii is like paradise. Now, I'm not a huge, I think the high end in Hawaii is going to do a lot better than like the middle class and below. People can remote work. They're going to move to Hawaii. But I'm talking like $3, $4, $5 million plus houses. But anybody wants to take me up a beach house, let me know. Here, same thing we mentioned, but different data sources. The 30% of U.S. markets to experience double-digit rent increases in 2020. All the usual suspects that here.
This excites me when you see. Oh yeah, when you sing these numbers, these percentage increases, if those hold true, that's quite exciting, especially if you're doing the value add plays for those syndication type deals.
But I don't know. Some people are always scared. They always get like, what goes up must come down, or what are some more negative? Oh, it's got to turn. It all averages out.
Inflation, interest rates are gonna go up. It's bound to gonna go up.
Yeah,
So
awesome,
then
cool. Because when the interest rates go up, that means the economy is doing better, and my rents keep going up.
I think the jobless rates are like so low right now, and like government's been pouring so much money, and that's why I think you had stated in the other slide where we recovered so quickly. And again, I get it. This is a very unique situation, but I don't know that, like you said, guys waiting on the side to pull the trigger. I'm excited for them. At the same time, don't just wait.
But yeah, you gotta let them go. You gotta lose. You gotta have them. You gotta miss out a few times for you to understand what a clear shot is. You've seen this before, right? When you saw 2008 come and go, 2010 or 2012, when did you jump in? When did you jump in?
Not till 2011.
Yeah, I was just lucky I jumped in 2000.
Oh,
I
yeah,
didn't
you're
know.
lucky.
I didn't
No, because
know any better.
2009, 2010, I was thinking about it, and that's when I was looking in Vegas, and I was talking to the wrong people. And that's when I told you, I was talking to the guys that were underwater, and they're like, no, you don't want to buy now. Look at me, I'm underwater, and not having that right mindset. So it took me a year to figure out I'm not getting at that guy's price. I'm getting at this way discounted price. So I'm not that guy. I'm a different, you know what I mean?
Yeah.
So it took me a year.
I even say, who cares what the other guy bought it for? I mean, if it works, it cash flows, it works.
Yeah, I mean that I was buying it for 50 cents on the dollar compared to these are like the foreclosures in Vegas. Yeah, this is post subprime, and Vegas had a lot of inventory. So I had gotten Fannie Freddie foreclosed properties to that. Yeah.
But I'm sure when you bought there were a lot of whispers and it's going to go back down. It's gone up 20% every year to where it's at now in 2012.
Yeah.
You know, there's always so many negative people.
Right. Yeah. Or you're buying in Vegas, it's a desert. You're just going to build more, which is a viable, you can't contest that too much. But then, I don't know, there's also the issue over there. I understand it. I think, is it water or electricity? I think it's water. You heard about that?
I've heard of that, but put a man on the moon. You know, he's the Mars.
That's true.
I think we can get some freaking water 500 miles from California here.
That's a very good point. That's a very solid point. Yep.
I don't know. We don't have flying cars yet. We have these really cool like apps and stuff like that though. So maybe we're misguided. But everybody needs water to drink. Rents in Dallas-Fort Worth rocket 15.5% a year. Everybody's talking about these like sustainable build for rent stuff. I think you were talking about this earlier. My thing is I'm not a huge fan of build to rent because like they put them all next to each other and you're buying into places where when things go bad or maybe like the tide, what I think about is like the tides come up on shore and they retract, right? This is a cyclical type of growth environment where when times retract, these types of new track development areas are the ones that go dark first as opposed to stabilize mature neighborhoods. But if you're a developer, you can make some crazy fees because people pay an arm and a leg to buy these types of things and buy into the narrative. Biden's got his, I don't know what stimulus plan we're on. This is all fake money, right? If you're not investing, you're not doing anything, you are losing money because you're just inflating it away. Tell your mom, tell your dad, if they're just sitting on their home equity, we're taking away their retirement from them, please. Is that too negative?
That's what I appreciate about you is you wear your heart on your sleeve and you say it, and that's awesome.
Yeah,
that's what I appreciate about you.
Did you see my last YouTube video?
Yesterday?
I don't know. I just record them and then my folks put it together. But it's like selfish grandparents.
No.
So like the whole premise of the video was everybody in Hawaii. Again, I don't want to say everybody, but plenty of people you and I know have like grandparents or parents that own a house outright because they were good savers. They're cash poor, house rich, and they're living like toe to mouth off Social Security, which none of us are going to have that type of stuff. What's Social Security? Heck, what's a pension? If you put that money into infinite banking policy, make 5% tax free, that's what's 5% of $1 million? 50 grand right there. You put it into some investing. You double that, you make 100 grand a year. You could send, grandma can live off 20 grand a year eating Lunchables or I don't know, or ramen noodles or whatever they eat, pho or whatever. But
better than a reverse mortgage, right?
Shit. Yeah, but then you could take that 80 grand after you pay for those living expenses and the taxes on the house, and you could send 2-3 kids to Marino. Yeah. I'm just saying, but people choose to cling on to the dogma that they were born. Oh, I don't want to go into debt. I want to pay things off. Just a mindset.
Yeah.
But going back into commercial real estate, 3 dominating trends today: hybrid workplace, supportive employment, well-being. So they're trying to trick people back into the office, gyms, better facilities, social stuff. And then demand for warehouse continues to increase. The below one, that's hard for the average investor, the mom and pop, $10 to $100 million net worth to get into. Infrastructure bill, I mean, it's just going to help it all. Oh, here's one. Here's some negative news. Adam reports that U.S. foreclosure activity continues to increase nationwide. So we all knew this was going to happen, where the foreclosure rates go up because you can start to foreclose on people now after all the moratoriums are lifted. So that's exactly what's happening. But despite what every single YouTube influencer was saying, the housing market is not crashing.
I'm sure they got a lot of hits that way, though.
Yeah, it works for that. Yeah, but yeah, nationwide, 1 in every 6,675 houses are in foreclosure. Not bad. Most of the people are paying their mortgages. Top states: Illinois, Florida, New Jersey, Nevada, and we talked about all this type of stuff. Millennial home buyers fuel the rise of lifestyle renting. The top city, again, I don't know how they came up with this stuff. Rentcafe.com. They come up with all these like weird top 10 lists that are fun to talk about. I don't know where the heck they get their data, where they get their rubric. But number 1, Indianapolis, Indiana, Las Vegas, Phoenix, Arizona, Oklahoma City, Memphis, Nashville, Charlotte, Columbus, San Antonio, and Louisville. Indianapolis looks a little out of place to me. I think they paid somebody off. But if people want to help me out and you want to get my book for free and the audiobook, go to SimplePassiveCashflow.com/book. Dean, if you're lonely during Christmas, I read my book to you on video. I don't know if I put a fireplace behind me as I read, but I actually read my whole book and separated by chapters, and it's on that website if you would like to check it out.
And this is not an audiobook. This is a video.
It's a video book.
Oh, there's a term for that.
I don't know. I just made it up. It's a video.
Oh, that's interesting. You'll keep us warm at night on these cold, rainy nights then.
Yes, I will. Although it won't take very long. It's not a huge book because it's pretty simple to do simple passive cash flow.
Oh, interesting. Yeah. It sounds, I might have to take you up on that, or maybe play it for my son.
Yeah, just play it in the background. It's PG rated, maybe PG-13.
Oh, are you kidding me? I would think it was G.
There's no F-bombs in there, but there might be some other.
Oh, that makes it more intriguing now.
But anyway, you guys, thank you for sticking with us this year. More to come. I think next year we're going to do some more in-person stuff. We're going to try. If you guys are interested in that, let us know. And then go to raaloha.com. And anything else, Dean, you want to promote real quick? Anything you're doing?
No, and like I said, I'm still continuing my YouTube channel. On a total separate note, I'm converting to getting an iPhone. I'm converting from Android to iPhone. How's that?
Oh, cool. Yeah. I added to Apple One. It's like their subscription services. It's a great way if you're cheapo to get like cheap gifts for your friends and family. So like you can have up to 5 people join, but you get 2 terabytes of iCloud, which is why I did it. But you also get the Apple Music app, which has like really high def audio.
Okay.
It's like where you move your head like this, and then the audio moves based on which way your head is facing.
Oh my goodness.
You get Apple Fitness. Like you give to your brother-in-law, you get any Apple Arcades. You give a slot to your brother-in-law or your sister-in-law, the Apple Arcade. You give the Apple Fitness to maybe your mother or father-in-law. Or Apple TV, if they're more of a couch potato. You also get that too. Think of it like Amazon Prime, where you can share it with 3 or 4 people.
Oh, okay.
You get a lot more subscription. I know you're all business, so you just need the iCloud and maybe a little music.
I'm trying to go all in and figure out which Apple Watch to buy. I'm not buying a MacBook yet, but I'm still excited because it seems like a lot of even simple stuff like sending videos to my friends, it gets truncated or shortened. And again, this is probably non-functional, just like nice to have kind of things.
Hey man, you've been saving your money for the last 2 years. You deserve it. And you deserve the world's best laptop, which is the MacBook now, like that M1 chip.
Oh yeah?
That thing is like game changer.
Oh yeah? We'll have to talk offline enough of that one. We'll talk at the retreat in January. How's that?
Yeah. All right, folks. Thanks for listening.
Free real estate investing group, check out reialoha.com.
We're just two local guys with so much to say. So listen to the Real Estate Braddahs today.